Yes, hi everybody. Hi, welcome to this new session with Coconut and Brigad. I hope everybody's okay.
Coconut's a bookkeeping and tax app for sole traders. And basically, a bit of background into the company is we set up in January 2018, and the two co-founders were accountants. And what they found is they went freelance and self-employed, but they found there wasn't a really good software to support sole traders and freelancers for the first time. And that's where the idea of Coconut came up. So it's a really easy, intuitive app for sole traders to manage their finances on the go. And I'm just going to talk about Coconut very quickly, about what we do and how we can help you guys. So essentially, Coconut is a mobile-based app where you'll be able to connect up your business bank accounts or your personal accounts, and categorize your business transactions. Make sure you've got your expenses all in there. We've got receipt capture in there. You can actually send invoices through the app as well. You can track your income, track your expenses. And then what we give you is a real-time live tax calculation in the app. So at any point in time when you're working with Brigad and getting paid, and you've got your expenses going through, you'll be able to see what your tax position is as you go. And it will give you a breakdown of the tax that you need to put aside. And then what we also do really nicely is if you have an accountant that will prepare your tax return at the end of the year, you can share access with your accountant, so your accountant has view of your books and what you can. They can get all the data they need to prepare your return. So I'm going to talk about just getting started as a freelancer. I'm an accountant by trade. I've worked in practice for nearly 15 years now. And I'm going to talk to you today just about some of the common questions we get when you're starting as a freelancer. I'm just going to talk through the fun stuff, tax, how it works, and hopefully it will give you a bit more insight into the sort of, the business you're running, the things you can claim, the things to be aware of, the things to consider. And like I say, at the end, we have a little Q&A session. Again, I can't hear anyone, so it's going to put your questions in the chat and I can pick them up at the end. So one of the first decisions that we always have when you're setting up business for the first time is, should I operate as a sole trader or a limited company? There's partnerships as well, but this is the common question we get, and it's one of those things. There's so many advantages, disadvantages of both. There's more reporting with the limited company. Sole trader is just a one-off return. Quite a few factors go into this. As an accountant, a very black and white look at sole trader versus limited. We always say, if you are looking at trading, try and estimate what you're going to turn over, and that will be a real key decision whether you're a sole trader or a limited company. So anything below around £25,000, if you're not going to earn more than that, then I'll probably say it's more advantageous to be a sole trader. When you start earning more money, above that 25,000, the associated costs with limited company, there's some more benefits, and the benefits will outweigh the cost. If you're earning less, then sometimes the cost of a limited company and running a limited company, the benefits don't necessarily outweigh. So a very blanket ballpark figure is like around 25,000. You want to consider limited company. I'm going to talk about the taxes that you'll pay as a freelancer now, because tax is horrible, tax is confusing. HMRC and the UK tax system is the longest code in the world. So I've tried to make it as simple and easy as possible, and hopefully this will help. So as a sole trader, the very basic concept of how you will get taxed is you have your income less your expenses, which are allowable expenses, business-related expenses, which we'll talk about in a bit, will give you your profit. And that profit is where you will be taxed on a self-assessment tax return. So every year, everyone has a personal tax allowance of £12,500, 12,570 this tax year. And that's an amount that you will be able to earn before paying any income tax. So as you'll see here, once you're going past that threshold, you'll pay income tax at 20% on earnings up to 50,000 and 40% on earnings between 50 and 150,000. What you will start to pay also is national insurance. So 2 different types of national insurance you'll pay when you're self-employed. So there's class 2 national insurance that's calculated at £3.5 a week if your profits are over £6,475. And class 4 national insurance that is based on your profits again. So from £9,500 you'll pay 9% class 4 national insurance, and then anything above 50,000 you'll pay 2%. And these are some of the reasons why we start talking about that whole sole trader versus limited company at that £25,000 threshold. And then we've got dividends for, I didn't catch if anyone was a limited company here, but they're taxed slightly differently. But sorry, yeah, cool. So then when you're a sole trader, what are the key deadlines? So what we're looking at here is every year with HMRC, you have to complete a self-assessment tax return. And it's completed once a year at the moment, but that's going to change. But I'll talk about that a little bit later. And here we've got the key deadlines. So say, for example, the 5th of April, 2021, the tax year ended for the 2021 tax year. And then the deadline for you preparing and submitted that return will be the 31st of January, 2022. And that will be the actual submission of the return and then also the payment of the tax. There's this thing called payments on account as well, where you pay in advance towards the following year. And I'm going to talk about that a little bit more. But some of the key things that you'll need to do to be able to do a tax return, you need to register on HMRC's website, which I think is part of Brigad's onboarding. Please correct me if I'm wrong. But what we'll do is we'll share these slides so you can access these dates and put them in your calendar, because some of these are quite key. You want to get that return done and dusted before the 31st of January, because otherwise what HMRC do is penalise you £100 any time after that date. So, and then what commonly comes up is what expenses can I claim? So obviously you have your income, and then there's a range of expenses you can claim as a sole trader that help reduce that profit figure I talked about earlier. So the income less the expenses equals the profit. And what we do there is, and as an accountant, what we try and do is say, like, do you have these expenses? If you do, you can offset these against your profit. The lower profit, the less taxes you pay in your income tax and then your class 2 national insurance. So some of these common expenses I'll talk about, anything to do with the job you're doing, like if it's chef whites, if it's, equipment that you need, you can claim for. The general rule of thumb is, like, if it's for business use, it's justifiable and you'll be able to claim it. We've got some other things here. So if you have to travel to work, maybe you use a personal car, you can claim a thing called the mileage rate of 45p per business mile, up to 10,000 miles. If you've got travel, you're jumping on the tube, you're going to work for a short contract that's saying, you're there for a month or something, you can claim for the associated train cost. We've got a few things here, your mobile phone expense. If you use your mobile phone for business use, taking calls, what you can do is HMRC let you apportion your phone bill. So say, for example, I've got a contract on £40 a month and I say 50% is business use. I can claim £20 a month through my self-employment as an expense, which will therefore, reduce that profit again, reduce the tax that you pay. So it's sometimes having a look at, the expenses that you will be claiming and just making sure that you are claiming them because they are allowable in the eyes of HMRC. If you're never too sure, just always check with like an accountant, because we'll be able to advise. We're the best players to, give you that advice that you need. Some other common things, your accountancy fees. So Coconut can get your bookkeeping in order and get you in a place where you can do the return yourself. Or what you can do is hire an accountant to help you, get the return done, get it submitted so you don't have to, and then you just pay the tax bill. The fees associated with that are claimable, allowable expenses. We talk about professional subscriptions and memberships. So any sort of memberships that are related to your job, for example, myself, I'm a member of an accounting professional body. I pay a fee every year. I can claim that if I was self-employed, for example. Again, you can also claim sort of training. So any training courses that you take to, better existing skills that you have, or upgrade your knowledge of the industry you work in, you'll be able to make those claims through as an allowable expense. So if you go on a training course that costs £300, you'd be able to put that as an expense for your business. What you can't actually do is claim for sort of training in a totally different industry. So I'm an accountant, and I want to go and do a training course on pottery, for example. You wouldn't be able to claim that through the business. But anything that's upgrading my accounting skills, knowledge, or understanding, I'll be able to claim for. And then there's this work from home claim. So feasibly, you guys might not be, working from home as such, but actually there is still this element of you'll be managing your business finances, whether it's on, using Coconut and going through doing your business admin. You might be doing that from home, and you'll be able to make a claim as an allowable expense. HMRC actually have an approved rate of £6 that you can claim. So I think it works out about £312 for the year that you can claim, without any sort of like investigation. It's an approved rate from HMRC, so they wouldn't query it if they saw it in a tax return. So you can claim £312 as an allowable expense. And it's all these expenses that, like I talked about earlier, is just helping you like reduce that profit that you have to, mitigate the amount of tax that you pay. And we're not doing anything that's untoward. That's what's in the rules with HMRC. So it's just making, you guys aware that there are things that you can claim that, you might not have thought about. People don't necessarily think about, claiming their mobile phone, but if there's business use on it, you can definitely claim a proportion of it. So it's just surfacing some of that to you guys, making sure you're aware of those claims that you can make. I talked in the graphic earlier about the timeline for self-assessment, and there's this thing called payments on account, and they sting the self-employed every year. If you're trading for your first time, you have this concept: you've got your income, your expenses, you've got your profit. Okay, cool. I've put my money aside for my tax. And then people get caught by this thing called payments on account. And basically what it is it's a payment in advance towards the following tax year that HMRC are quite crafty, works out well for their cash flow. And what you'll see here in this graphic, so we've got someone that's done a year of trading, they've got their self-assessment bill, it's £10,000, and they think, oh, I've put £10,000 aside, so I'm okay. But actually, what HMRC do is make you pay towards the following tax year in two instalments. So you see, actually, on the 31st of January, not only does this example, they have 10,000 to pay, but they pay 50% of that bill towards their following year. So he actually has to pay on the 31st of January £15,000, and then they have a second payment that's due 31st of July for a further £5,000, which is basically the other 50%. And I'm just making you aware of that because that happens to quite a lot of people where in the first year of trading, or you're doing this for the first time, you're saving for your tax, you think you're all happy, I've got all my money aside, and then you get stung by this payments on account. So I'm just bringing that to your attention. You may be saving for your taxes, which is absolutely fine, but there is this payment in advance. And HMRC, if you actually didn't pay that, they charge interest and all sorts. So it's just one of those to make you aware that you might have this subsequent payment, and this payment is applicable on if you have a liability of over £1,000. So say you had a tax bill at the end of the tax year for £900, you wouldn't have to make these payments on account, but anything over £1,000 you will. So just be aware of that one. That you need to make these payments in advance. And say, for example, that you get to the end of this year, you make these payments on advance for £10,000, but you do your tax return for that year for 2021, and your liability was only £8,000 instead of 10. You actually get a rebate on what you paid. So you paid 10, but actually your liability was only 8. You'll get the £2,000 refund from HMRC. So just think of those as it's payments in advance. You're paying your tax off in advance. This is possibly going to change, so I'll talk about that a little bit more shortly. So how much money do I need to set aside for tax? So on the back of that one, like I say, when it comes to putting money aside for taxes, this is a little bit limited company heavy, so we're sole trader focused. But as a rule of thumb, I always say overestimate the amount that you need to put aside. So a very basic rule is quite a lot of people put aside 30% for taxes. And the reason for that is that it usually covers the income tax that you'll pay up to the £50,000 sort of threshold, because that's 20%. And then you have your class 2 and class 4 national insurance, which is, the 9% I was talking about, and then the £3.5 a week. So quite a lot of people put 30% aside as a basic rule of thumb. But with these payments on account that I also factor in when I'm talking to people, I would always say try and put 40% aside just to cover the potential payments on account that you might have. But what I'd actually say is, the software's there now, where you get the tax estimate, like we were talking about Coconut, that will give you the advice of the money you need to put aside. So I think it's one of those things that you just want to be aware of. And, all I can say to the clients that I work with is keep on top of your finances. These apps are here, and Coconut, for example, is here to keep you on track and know what you need to do on a monthly basis. I've worked in practice for so long, and people can get in a real mess, and it all stems from not keeping your books in order. I used to get customers that leave a whole year's worth of accounts, not know what tax they had to put aside, or any idea of the tax that they actually had. So the biggest advice for setting money aside is keep your records up to date on a monthly basis, and you'll be in a much better place. Also, when you go freelance, quite a lot of people talk about VAT, and when you need to worry about it. So VAT, there's a VAT threshold where you have to register for VAT, and that's £85,000. So I'll put it in here just to quickly skim over it, because if you're not near that threshold, there's no benefits to registering for VAT. So I wouldn't go near that. I'd actually say if you're going to look at VAT registration, you're probably going to be a limited company. I don't think you need to consider it unless you were near the threshold. So, and then I've talked today about self-assessment. I've gave you some of the key deadlines, but actually that's changing, and it's changing, and it's called MTD ITSA, which is basically making tax digital, income tax self-assessment. And what does that mean? And this is just I'm going to talk just really shortly about this one, because the way self-assessment is currently done is you complete one return a year, you make your payment for the liability, and you make payments on account. But MTD income tax from April 2023, you'll have to keep your records digitally. So we get a lot of customers come to Coconut and they were like, I was using a spreadsheet. I used to give my accountant like stacks of paperwork and things like that, and bank records. But actually, this whole initiative is about customers moving all of those spreadsheets and things to approved software by HMRC, and keeping your records digitally on something like Coconut, where you've got your income, you've got your expenses, you've attached all your receipts to your transactions. And self-assessment itself is actually changing. So this is probably one of the biggest shifts in sort of like the tax system in recent number of years. But actually, the one return will turn into 4 quarterly submissions. So what you'll actually be finding is, if you're a sole trader or self-employed, you'll be completing quarterly submissions to HMRC, letting them know of your income and your expenses on a quarterly basis, and then you have a final declaration. So what happens is, from going from one tax return a year, you'll be actually going to 5 submissions to HMRC. So you'll be touching base with HMRC a lot more. And I think the whole reason for making tax digital is to get people away from accounting errors, because spreadsheets are very good, but actually the amount of accounting errors you can make on a spreadsheet, or a formula error and things like that, is actually really high. So this is like a big shift in the tax system and how you will submit returns to HMRC. So what we're trying to say there is that it's one of those opportunities now to get on the right software, like we're working towards making tax digital, start getting used to the software that you're going to have to keep records on come 2023. And I just put a note in there. So far the rules around this is when your taxable turnover is over £10,000 if you're a self-employed business, or if you have income from property is above £10,000. So if you were actually below that threshold, you wouldn't have to comply, and you could use, you wouldn't have to use specific HMRC approved software. But it's just one of those ones. So you would still do a self-assessment tax return, but actually at the point of going over that £10,000, you would have to comply with this, and you would change the way you submit to HMRC. So it's on the horizon, but it's just one to be aware of if you're, still self-employed towards 2023. There's going to be that change. So yeah. And then now, I'm just going to open the floor up, really. I can't hear you, so it might have to be chat. But if anyone's got any questions or queries, feel free to drop them in the chat and I'll answer them as we go. I don't know if Pauline wants to add anything, or if Ness is available to speak or wanting to add any more. But
yeah, it's not working. Nobody can hear me.
Oh, I can hear you now.
Can you hear me now? I think it's because you were presenting. Maybe there were too many presenters. I don't know. Can you hear me now? Yeah.
Yeah.
Thank you. Thank you, James. Sorry about the. We could hear. We could hear everything you said. We could see the slide properly. It's great. So it was all good. Thank you, James. So yeah, for the few things you said during the presentation, you basically that's so Brigaders as sole traders is not company. So everything you said really correspond to their needs. So this is great. One more thing you said, to put aside 30% of your income. So do you mean that monthly or yearly?
So what I usually say there is 30% on a monthly basis. So if you have your income and expenses for the month, have a quick look at that. What I'd probably say is Coconut, for example. I'm not trying to sell us, but we have a monthly breakdown. So you'll see your income, your expenses, and your profit, and then I'd say put 30% aside of that.
Yeah. Okay.
Monthly is always better. It gets you in a good habit. But
yeah. Fine, perfect. And so you answered this question about training. So this is a question we do have often. So so you're saying, like, just to summarize, if you do training, that basically to upskill yourself or to upgrade what you already know, you'll be able to claim that as an expense. That's right.
Yeah, 100%. So it's all about like training in the environment that you're in, the industry that you're in. So if, say, for example, I'm not very good with your industry, but accounting. So say, for example, there's an update to, an accounting paper or the way you submit accounts or whatever it may be. I would need to know that to give, that value to my business. So I could claim that. But if it was something totally different, uni degree, anything like that, like a master's, you can't claim for that. And like I say, if it's a totally separate trade or industry, so then you wouldn't be able to claim for it.
Okay, I see. Perfect. Great. I think I don't know if anybody has questions. You can throw it in the chat. Otherwise, what are we going to do? Are we going to share the presentation a bit later, James? If that is okay with you?
Yeah, 100%. So we'll share the presentation so you guys have got it for reference. And my email address is in there. So I'm an accountant by trade. So if you get any questions that you don't want to share in the chat, just drop me an email, and I can help out if it's a bit more sort of a personal circumstance or whatever it may be.
Yeah, I think I share it to people, to the attendees tomorrow. Perfect. So if we had like many the key things to that brigaders can come on with, like the more important information that they should remember after your presentation, what would they be? What do you think?
Yeah, I think it's just my biggest thing, and this is just keep on top of your finances. Like do it on a monthly basis.
Yeah.
Weekly if you need to, but keep on track monthly, because actually the biggest challenge is the customers that come to you that have left it for 8 or 9 months.
Yeah.
Because you can get in a mess and you might not save for the tax, and it becomes a real challenge. So the biggest thing I can say is, keep on top of your finances regularly. If you're using Coconut, awesome. Check in. Just go in. Coconut's quite good. It gives you push notifications and things like that. But there's loads of softwares out there. Just make sure it works for you, and you can very top line see your figures very easily, and you're happy that you understand them.
Yeah, definitely. And so I think you changed your plans a little bit. So I know that I can see on the session that some people been with Brigad a long time, so they already have maybe an account with Coconut. But for the new people coming to Brigad, what is the new plans that you're offering at Coconut for freelancers?
Oh, so the actual Pricing plan, sorry.
Yes.
Yeah, so we have 2 pricing plans. We basically have just 1 second. Sorry. We have the side hustle plan that's £3.60 including VAT, and the professional plan, which is £12 per month including VAT. And we can share details out about what features you get for which plan. Brigaders, Pauline, you probably already told the guys, but you get 3 months free if you go through Brigad. So you can trial it out, see how you get on. We've got a really good support team. I'm also in there, so if you get any accounting questions, you can sort of jump in on chat and ask anything. But yeah.
Perfect. Well, thank you so much, James, for your time. I'll share the presentation with everybody afterwards, and again, as James says, his email address will be on the presentation. So if you have any questions for him, please drop him an email. Thank you so much, James.
Awesome. No worries at all. Sorry about the audio there.
Yeah, have a good evening, everybody. Bye-bye.
Bye-bye.